Got no words to change your nation, but your mighty is come. You spent your life so stuck inside. If no one ever hears it, how we gonna learn your song? So come on, come on, you gotta, come on, you gotta. So why let your voice be changed? Baby, we're a little different. There's no need to be ashamed. Got the light to fight the shadows, so somebody get away. I wanna sing, I wanna shout, I wanna sing till the words cry out. Bring it all, I'm not afraid. I will know. Oh, 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 oh,
All right, all right. Hello, everybody. How you guys doing? There's a little chat box if you're watching it on YouTube on to the right where you can talk. And so I just need somebody to just holler back at me and tell me that you could hear me just fine. And we'll go ahead and get this thing started. All right, fantastic. Thank you, Jimmy. All right, guys. I've been away for a little while here, and I actually kind of miss you guys. So you know, I'm actually very happy that some of our team members have kind of reached out to me throughout the last couple of weeks about getting back into maybe doing some webinars or maybe just sharing some tips and tricks to help with their trading. And so, I decided to go ahead and put this on. And first of all, let me just say this about trading, okay, guys? It's it's easy, but it's actually kind of hard at the same time, okay? And I'll go over a little bit about what makes it easy, and I'll also talk about what makes it hard. And I think the main thing that I want you guys to get across when I go through this is that I want you to, the things that I'm going to be sharing with you are things that are working for me. And if there's something that I'm telling you, and if you're doing something else that you feel is working for you, then I don't want you to change it, okay? So everything that I'm going to share with you here are just things that's working for me. And so I want you to just take what you can from this webinar, and the things that that may be able to help you in your trading. Then I want you to go ahead and take that and use it. And I really hope that it will help you in your trading. But if there's something that you're already doing that's working for you, then don't stop what you're doing, okay? So you know what they say, if it ain't broke, don't fix it, okay? All right. And let's go ahead, and I'm gonna go ahead and get this thing started. And towards the end, I'm thinking, I have a lot of material here to cover, but I'm gonna try to keep it within an hour. And then if you guys have questions, then we can go ahead and take some time to do some questions afterwards. Okay. So I'm looking at my other screen here, and it doesn't look like it's very clear. Maybe it's just my internet. But if the screen is clear, if you guys are cool with it, we're going to go ahead and get this started. Now, this webinar isn't so much about it's not so much about charting. It's not so much about indicators. I'm not going to go over Fibonacci, Elliott wave, or anything like that. We have all of that inside of iMarkets Live, the academy. So you can just kind of go through that, and you can learn all about that stuff. Okay, this webinar is more of like, about the things that are working, and some things that I've learned along the way that have allowed me to be able to really be consistent in my trading. And so let's I'm just going to go ahead and dive into it. For some reason, my screen that I'm seeing on the other side here as if I'm like one of the audience members is not clear. And it might just have to do with my internet, but okay. So Jimmy says it looks clear. Okay, fantastic. All right, so the trade strategies that win. Okay, so we're going to go over the two specific types of trades that I focus on. I'm going to talk about the main time frame that I watch, And I'm also going to talk about trade management. Once when I enter my trade, how do I manage it? And then, I'll show you some of my screen setups, templates, and profiles. Actually, I won't go too much into the profiles and stuff, but I'll show you a little bit of my template. It's actually very simple. And my written out trade plan, which is also very, very simple. And throughout this webinar, I'll also talk about, some of the things that you should avoid in trading that will hopefully make a difference in your win rate. All right, so first off, let me say this. Trading is it's 90% what you do before you hit the buy and sell button. I think I have that on another slide, but here. Where is it? Okay. Yeah, I put it on trade management, but trading is 90% trading is done before you hit the buy and sell button, okay? As a newbie coming into trading, because I've only been trading for like a year, all right? And so maybe I should just start off and tell you a little bit about myself if you don't know me, but basically I've been working online full-time for the last 5 years or so. And so before I became a trader, I was an online marketer. I'm still an online marketer. I still make the bulk of my income, my living online. But I have always wanted to learn how to trade. And I've been a stockbroker before, and I've also been a financial advisor, and so I have a lot of experience in the financial services world, and so I've always wanted to learn how to trade, but I never took the time to really study the charts or like really understand technical analysis. And the reason is because in my head I've always thought that it was too complicated. And then finally last year when iMarkets Live came about, I decided to I think that it's time. I really wanted to be able to learn a skill that I can just have with me, and so that in the future I can I can just trade for a living. And I think that's the whole goal. And I think that maybe that's your goal too. And that's why you're on this webinar. That's why you joined iMarkets Live. And so eventually, the cool thing about it is that once when you learn how to trade, if iMarkets Live wasn't here anymore, if you utilize the material that you learned in there, and along with the support from the team leaders and myself, and you become a great trader, and you become a great trader, and you decide that you don't want to be in the business anymore, and that's perfectly fine. I think that that's how it should be. If you feel that you've been able to get to the level of trading that you want, and you don't need the trainings anymore, and you're able to have your own game plan and your trade plans, and be able to execute and be successful at it, then you don't need any of these tools anymore. And if you could outperform, the auto traders, okay. I personally feel that I'm outperforming the auto traders. So honestly, I really don't use the auto traders anymore. But that's just me, okay? So, all right. So we're going to talk about the trading week, okay? So first of all, yeah, 90% of your trading is done before you hit the buy and sell button. I'm going to go over with you what my trading week looks like, okay? So starting on Sunday, that's when I look at the charts, okay? I don't really trade very much on Sundays, if at all. But I do look at the charts usually during the Asian session. So market opens, it doesn't really matter to me. Most of the time, I do not carry my trades overnight or over the weekend. So market opens, it doesn't matter. I spend my time with my family. I go to church and all that. And then towards the evening, I take a look at the charts, and basically I set alerts. And the chart that I look at the daily support and resistance level for certain trades. So let me go ahead and go over here to this. All right, so here's what my charts and my trade setup looks like, okay? So it's just real plain, no indicators. What I'm really just looking to do here is I'm just marking up really strong support and resistance levels, okay? And you can only find these strong support resistance levels on a daily chart and a 4-hour chart, okay? So basically, those are the main time frames that I'm looking at, 4-hour chart and daily chart. All of these are mostly on the day chart, okay? As you see here, day, day, this one's day, 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 day. Okay, so if you use TradingView, then you can do this easily by going up here, okay? So instead of just having one graph, one chart up, I do 8 charts. And that way I could put multiple charts on one screen, okay? So once when I have this up like this, and you could do different sets. So I have daily set 1, and then I also have I'm looking at daily set 2. I also have daily set 1, and then sometimes I do a daily set 3 too, okay? Because you know, there's really actually 28 currency pairs that I look at. You know, for certain weeks, I just focus on maybe 8 or 16. But so as an example, we'll take a look at these right here, okay? So I go in here, and then I pull up each of these. You can just click on this, it'll expand it. And then I mark it up as to, you know, the areas of support and resistance that it will most likely reverse if it hits, okay? And so too much about these far away ones like this one right here. I could just kind of delete this off because it's going to take a while for it to get down here, okay? So you don't have to worry about that. But for areas like this, you know, you want to like mark this up, and I usually use green for the support and red for resistance, because that kind of in my head, I mean, it just helps me to recognize that, okay, it's hitting the green line, that means buy, okay, green means go, and hitting resistance up here, that's a sell, okay? So that's why I have it color coded like this, but you can do it however you like. And so once when I have it like this, and I see that it's kind of heading down a little bit right here, okay? So it's heading down. So what I want to do is I will go right here, and then you just do a right click, set alert, okay? And then once when you go right here, then I could just change this to, I could just click, say buy, okay? And then I'll create the alert. So the alert is set. I don't have to sit here and watch it all day long, okay? I can just move on to the next currency pair. And what this is gonna do is that I have it set to where when it alerts, it'll actually send me a text to my phone, okay? And so once when I'm alerted that price is in the area of potential buying, okay, then I will go into the 15-minute and I will look for an entry from there, okay? So I'll do that, and then I'll go through all of these, and I'll do the same thing for each of these, okay? So GBP USD looks like it's hovering right here. You see all these areas right here. You know, you got this. Along with this, okay? Those are good support area, and it looks like it's hovering right around here. Possibly it'll be a trade if it comes down to this red line right here, okay? But we'll see. And so, you know, I could also do an alert right here. Hi. Okay, so I'll do this for like all 8, okay? And then I'll probably do a daily set 3, and then I'll do it for those 8 currency pairs too. And so that's how I have my week set up, okay? So pretty much that's it. I have that set up. I just set the alerts, and then what I do is Monday through Thursday, I start trading. And I don't trade all day, but I do wake up pretty early. Usually around 5:30 to around 6 o'clock. I'm up, and I'll take a look at the charts. And usually right around 5:30, there's a lot of U.S. news that comes up. So I really don't take any trades during that time. But I just get up to take a look at the charts to see what they're at. And basically during those times, then I look at the 4-hour chart, and also look at the daily. Okay. So again, these are the main time frames that I'm concerned about. Okay. And the reason why is because these offer the greatest support and resistance. Okay. And then number one, what I do during this time is I mark up trade setups for trend trades. And then number two, I identify possible divergence trades. And so maybe I did not put that slide there, but let me go ahead and do a real quick slide here. I thought that I did earlier. I trade strategies. So these are the two main trade strategies that I focus on. Okay. Put this up here. And so I basically mark up the trade setups for the trend trades, and then I identify possible divergence trades. And I'll quickly kind of go over what those are too for you guys. So what is a trend trade to me? Hold on. Okay, I did have that slide. I'm sorry, guys. Let me cut that out. So my two trade strategies is trend trade, and basically with the trend trade, here are my rules. Okay, I trade with the daily and 4-hour, and they must correspond. Meaning the daily, if it's going to be a sell, the daily has to be on a downtrend. The 4-hour also must be on a downtrend. Okay, and it also must reach a strong support or resistance level. Depending if I'm selling or buying. Okay. And then with the divergence strategy, basically if I'm trading divergence with the 4-hour and daily trend, then I go for about 40 pips plus. If I'm doing a counter trend trade, I go for 20 pips. Okay. So I always trade with trend except if there is divergence. So this way, the market is only trending about 30% of the time. So, you can't just always say, I'm going to trade with trend all the time, because if you're trading with trend just all the time, then that means that you're just going to be sitting on your hands if the next 70% of the time, because it's only trending like 30% of the time. Okay. So the strategy to counter trend trade is divergence. And I'll explain more about divergence and why that is such a good trade to learn. Okay. And so so basically I basically just look for these things. I look for trade status for trend trades, and then identify possible divergence trades. And so let's go ahead and take a look at one of the examples here. Well, let's look at this. Yeah, I pulled this up earlier. Okay. So if we look at USD JPY, okay, and this right here, guys, this is my chart setup. If you want to know what it looks like, this is all that I use most of the time. Yeah, and I have my MACD up, but I really just use the histogram. And so if you don't know how to get it to be like this, basically if you know that let's just say if I close this out, if I want to put that on there, I just go to indicators, and then I look for MACD. Okay, so when you put the MACD on, it's going to look like this down here. Okay, so what I do is I just click on that and I go to format, right click, go to format, and I like my histogram to be about, to be kind of grayish like that. I think a little bit lighter. And then I like to move this up a little bit more to make it a little bit darker. Okay. And then I just turn on the MACD and the signal off. So that's all that I use. And basically I just use this to identify divergence. Okay. So let's first talk about trend trade. Okay. So if I'm looking at this is a 4-hour chart. So say this is doing right now. What's the trend for this? I say this is a downtrend, right? Makes a lower low. This is a lower high, lower low, lower high. Okay, so it's making a downtrend. So now I'm going to go over to day chart. And let's take a look at that too. Okay, so the day chart is also trending down. So this tells me that I would be smart to trade down or sell on this pair. Okay. And so where would the area that would most likely be a good sell? And so as a matter of fact, you see this right here? I already have this marked up, but as you notice, we got areas of resistance right here, areas of resistance right here, and a little bit through here. And I didn't take this trade, it's too late now, but you see how it's going down through here. Usually right around this area right here, you would want to just set an alert up here, so that if it does go up to this area, then you would sell it down, okay? Because you're going to go down with the trend. Okay, so that is a trend trade, all right? Now, if we want to do divergence, here's what, for divergence, I look at, okay, so once when it gets like this, I don't, remember, these are the higher time frames, okay? So if you're doing day trading, you don't want to be just placing a trade right here. You just look at this as your trade setup, and then you go over to identify that you want to sell this, but to take the trade, you want to go to your 15-minute chart, okay? So as you can see, the 15-minute chart here, it's it's basically hitting the area, and if you had placed a sell, then you would have caught some pips right here. But let me go ahead and put my histogram back on there. Okay. And now let's talk about divergence, okay? So basically, let's see how this works out with divergence, okay? So divergence tells a story, okay? And the reason why divergence is so powerful is because the people, the main groups of I guess institutions and the market makers and brokers or or institutions, the ones that have big money, those are really the ones that are moving the market. So you and I, we really can't move the market, okay? So we gotta just play with the big boys, and we gotta go with whatever they're doing, okay? And so usually the thing with these institutions is that they like to take out people's stops. And so that's really their only trick that they have in their book. And so if you understand that how they do this trick, then you can use it to your advantage. And that's where divergence comes in, okay? So basically, how it works is this. The market moves up, okay? So it moves up, and then, you know, it kind of moves up again. And so this looks like a nice little area to trade, right? Because it's making a double top, okay? So you can do a sell right here. So it goes up here, it goes down, it goes up again. You see a double top, so you make a sell, right? And so even though the institutions and you know, the syndicate, this collaboration of, you know, big money, they know that they want to take this pair down, but they want to take out your stops. So you place your sell right here, and it starts to go your way. You say, oh yay, it is going my way. And then what happens is that when it goes down here, you start to move your stop. Let's say your stop is up here, but now you moved it to break even, right? So as you move it to break even, then they move the market back up to take out your stops. Okay, they don't want us to win in the market. Okay, the forex market was created to take our money. It's not to give it's not to give us money. All right, so you got to keep that in mind, and we got to fight for this. And so it's going to take out people's stops. But as it goes up here, once when it takes out all the people's stops, and even some of the people who set their stops a little bit too low up here, it'll take all those stops out too, and then it finally moves down. So how do you identify that? If you look at the histogram, it'll show you, okay? It's already going here, and it went all the way up there, right? It makes a higher high, and then it makes a higher high, and then it drops. Well, if you look at the histogram, it makes a huge high right here. This one is high, so the histogram should be higher, right? But yet it's telling a different story, meaning that this is going to drop. Okay? And so what I'm looking for as in the mornings is I look at these histograms. I usually look at the big histograms, and then I know that, okay, if a smaller one comes up and if it's making a higher high, then I'm going to trade it. Okay, so just imagine that all this blue area right here has not happened yet. Okay, if this hasn't happened yet, and if I'm marking up my charts, then I'll look at this big histogram right here, and I'll say, okay, so that's a pretty big histogram. If the histogram, if this comes up higher and the histogram is still showing lower, then that's a good possible trade. Okay. Let's remove that. And then likewise, let's look at another example. So it takes it down, it hits this support down here, it goes up, and then it comes up here, makes about almost close to like kind of like a double top. And so it starts to drop again, but you notice how big that histogram is, okay? So you notice how big that histogram is, and it starts to drop, and yet again, they want to take out our stops, so they move it all the way back up. If you moved your stop back to break even at that point, you would have been taken out, or even if you have placed your stop up here, they want to take out your stop. And so that's exactly what this is. But if you look at the histogram, again, it disagrees. It's a lower it's a lower high than this high. And then of course this is starting to drop, and it comes down here. And if you look at this, if you took this trade, it gives you about 50 pips right now. Okay, this trade over here, you would have caught about 100 pips on this drop. Okay, so those are basically the main two trades. And so I just look at these trade setups, mark up the trade setups for the trend trades, and they identify the possible divergence trades, and I set the alerts. Okay, so for instance, let me see if I could find something. Let me see, Euro pad. Nope. So I'm gonna try and find an example of a possible divergence trade setting up. Okay, so you notice I need for this one, this histogram to be either really big down or really big up. So that there's none there. Let's look at Euro JPY. No. Let's look at the GBP pairs. All right, so this right here, let's just say, for instance, you see this big histogram right here. Okay, it's a huge drop right here, and looks like this is there's some support, some good support right here too. Go to 4 hours. Well, kind of, but the support is okay. I like it. I like the support down here more. Okay, but let's just go with this as an example. So it drops, it comes down here, and it goes up. But if you look at the histogram, it's a huge histogram. Okay, so what if it drops again? If it drops again and it comes all the way down here, let me see if I could find. What if it drops again? It comes all the way down here, okay? And it'll hit this area of support, and the histogram only shows a small hump that looks like that, okay? Now you got yourself a divergence trade like that, and then right there. So what I want to do is I would set an alert down here, okay? So I'll right click, I set alert, and I say something like possible divergence buy. And so now I got that alert set, okay? So that's what I mean by I look at the charts and I identify possible divergence trades. So I look through some of the charts and I go over and I identify some of the possible divergence that would happen, and also the trend trades. All right. So that's how I start up my week, and that's how I do my trading. And then here are some things that you need to be aware of that I personally don't do. Okay, so these are the no trade zones for me. Okay, I don't trade 1 hour before New York closes. Okay, that is 1 p.m. Pacific Standard Time for me, and I don't trade any day between 2 p.m. to 5:30 p.m. Okay, usually around that time there's not a whole lot of action. There's not a whole lot of syndicate or big banks moving money, and I also don't trade 30 minutes before red news comes out or 30 minutes after red news hits. Okay, and so I put this kind of together so that you guys can kind of see some of the red news that's important, and what you want to do is that you always want to pay attention to the red news. So as a matter of fact, I didn't put it up here, but I look at during this Sunday here, I also look at news and events for the week. And so I use my FX book and also Forex Factory. And so what you want to do is that, if you're in my FX book or even Forex Factory, there's lots of sites that you can look at, but you want to clean this up. Okay. You don't want to care too much about these low impact news or median. So you want to go to where it says more, and you can actually turn off low impact and medium and only have the high impact news there. Okay. So if I just refresh the screen, it's going to only show, okay, I kept the medium, but let me see here. Got to take off medium too. Oh, I don't know why I unchecked it. I don't know why this is still not doing it. But anyhow, you don't want your screen to be too cluttered with all this news. You want to just pay attention to the to the red news here, okay? Because those are things that will possibly affect your trade, and it's super important. And especially this list of 10 news here, you got your consumer confidence surveys, industrial production, inflation, interest rate decision, retail sales, and of course, you got your non-farm payrolls. So these are some of the top news that you should be aware of. And every time, whenever somebody like a big figure like the president, of the United States talk, or or like the head of the central bank talks, you gotta like just pay attention to those kind of people and see what they're talking about, and because those things could also affect the trade. Okay. All right. So I went through that. All right. So let's talk about trade management. So again, 90% of your trading is done before you hit the buy and sell button. And then you set your stop and your TP is set. So if you don't want to set your TP, at least set it in your head and know that that's where you want to look at taking profit. Okay. But if you are going to be away from the computer, then I would recommend just go ahead and set the TP and also set your stop to protect yourself. Okay. And also be aware of red news coming up. So if you have a trade that you've already entered and, 4 hours later, there's some type of red news that's going to affect your pair, or any type of red news actually, because back in the days, it used to be that red news would only affect whatever currency pair that red news is about. But nowadays it's a little bit different, because all currencies are really tied together. So any type of red news could potentially affect your trade, even though it's not even the news for your currency. Okay, so kind of just be aware whenever any type of red news comes up. And if you are in profit, what I usually do is that if I'm usually in at least 20 pip profit, then I would just close out the trade, depending on how I'm liking the pair, if it's going with the trend or not, or if I feel like I really want to keep the trade, then I would at least move my stop to break even. So that if the red news comes up and it affects the trade, I'm not going to be in the hole. All right, so this is what I do. After about 20 pips, I move my stop to break even. After about 40 pips, I move the stop to 20 pip profit. Okay, and I let the trade run. And usually I only do the 40 pips plus if I'm trading with the trend. I don't set like a very high goal. So, usually about 20 pips a day is pretty good for me, 20 to 40 pips. So, some people go for like 100 pips a day. And you know, that's fine. If you can do that, that's great. But I found that for me to be more consistent and for my trades to work out better for me, I just do 20 pips, maybe 40 pips or so. And of course, you know, I do catch more than that, you know, but I'm just saying that if I catch this, I'm happy. Okay, I'm not gonna try and, like, you know, hold out the trade for more profits. Okay, so all counter trend trades must have divergence for me to take the trade. Okay, so if I'm going against the trend, it has to show divergence. Like, you know, it has to hit that support or resistance level. It has to move the other direction, and then it has to move back down through and making a higher high or a lower low with the histogram disagreeing before I take the trade. Okay, and I only risk anywhere from just 2 to 5% max per trade. And a lot of people are confused about this as to how do you figure out 2 to 5% max per trade? How do you calculate that? And so let me kind of show you guys how I do it. I'm going to pull up my phone here. Okay, so I got this app, okay, and it's in here, and it's called FX Calculator. I think it costs like $4.99 or something. There's some free ones that you can get, but I kind of like this one. So anyways, basically, let's just, for example, let's just say that your balance is, let's just say your balance is 10,000, okay? So let's say your balance is 5,000 and you're willing to risk, let's say you're willing to risk 500, you're willing to risk 5%. So that's $500, okay? So if you're risking $500 and if 5%, and now you're gonna set your stop. So here's, let's say your stop is at 60 pips. If your stop is at 60 pips, you're risking 5%, you click calculate, and it's gonna tell you that the most that you can do on this trade is 0.64, okay? Because if it goes the other way and it hits your stop, you're gonna lose 5%, which is 500. So if you're going at a standard lot at 0.64, that'll equal a $500 loss, okay? So let's just say, what if you want to only risk 2%? Click on that, and then I click calculate. If you're gonna risk only 2%, then you can only go 0.25, okay? So this way, you're not exposing yourself. Your risk is still the same, but it's just all dependent on the stop loss. Because let's just say we keep the 2% risk at 200, but let's say now you can do a smaller stop. Let's say your stop is now only 35. If your stop is at 35, you click calculate. Now, instead of going 0.25, you can go 0.44 on this trade, because if it hits your stop, you're still only losing 200, but now, you know, you can do a little bit higher because your stop is lower, okay? It is smaller. And a lot of people are also confused about, you know, how do I set my stops? And I'm gonna go over that with you too, okay? So how do I set my stop? Okay, so actually, let me go over this. Okay, so first, your first step is you got to determine your risk, okay, in which I just showed you. You have to just determine your risk as to how much you want to risk. Are you going to do 2%, 3%, 5%? Or what is it, okay? So when you determine your risk, when you determine your risk, then you have to look at the 3-week average for the currency pair to calculate your stop, okay? So I know some of you've heard of the 1-to-1 ratio, 1-to-2 ratio. That if you're gonna go for 20 pips, you could do a 10 pip stop. If you're gonna do if you're gonna go for 50 pips, you can do maybe a 25 pips stop. That actually doesn't work for me. I found that the market, the way that the market moves, it's a breathing entity, and so it's not gonna it's not gonna it's just not gonna pretty much it's not gonna like do what you want it to do according to that. I mean, it sounds real good when people talk about it that I'm only risking one, but I'm going for two. It sounds real good, but it actually doesn't work. I mean, it doesn't work for me. Okay, so I'll tell you guys that most of my stops are going to be bigger than what I'm taking my profits at. Okay, but because my my win ratio is so high, I mean, I'm doing about 80 to 85%. And so because my trade win rate is high, I can do that. So even though I do get stopped out sometimes, it doesn't, I have enough of a win to be able to, still be on the positive side. So let me go ahead and show you what I'm talking about. Okay. So I calculate the stop according to a 3-week average. And of course, you got to look at where the next support or resistance areas are. And that's where you should set it. But you also have to pay attention to the 3-week average of the currency pair. So let me go ahead and go here. And I already have this open, but I use this website called Metaf. Okay. So once when you go to Metaf, you can just click on where it says Forex, and then you go to Trading Tools. And then on here, you could look at Forex correlation, Forex volatility. That's what we want. Go to Forex volatility, and then you want to put 3-week right here. So this is going to give you the 3-week average for this currency pair. So on a daily basis, on average, this currency pair, AUD, moves about 73 pips. Okay, on a daily basis, on an average daily basis, this is how much it moves. Okay, so you could kind of see how each of these are. So let's say AUD USD, it's been moving about 56 pips per day. Well, then I usually do my pip stop about half of that. Okay, so I can do about 25 pip stop for the AUD USD, and then of course the pip stop, I have to also do it at an area where there's some support and or resistance, depending on if I'm doing a sell or a buy. Okay, and now let's go down a little bit here. I'm going to show you. Let's just say, for instance, something like, okay, let's look at the Euro NZD. So the Euro NZD in the last 3 weeks, on average, on a daily basis, it's been moving at 141 pips. Okay, so you think about that. Let's just say you come in and you decide you want to trade the Euro NZD, and you decide you're going to do a 1-to-2 ratio, pip stop on this. So you decide, okay, I'm going to go for 40 pips, and I'm going to do a 20 pip stop. More often than not, I would have to say 95% of the time, you are going to get stopped out on that. Okay, if you look at how much this has moved, a 20 pip stop is going to be real easy for this to hit. Okay, so you want to look at these and pay attention to this so that you don't set your stops too low. Don't do the 1-to-2, 2-to-3 thing, ratio thing, and I guess I shouldn't tell you that. If you feel that it's working for you, go ahead and do it. I don't do it because it doesn't work for me. Okay, but basically you want to pay attention to this because and set your stops accordingly. So for the Euro NZD, I probably set my stop to about maybe 60 to 70 pip. Okay, so if I'm doing a 60 to 70 pip, is it going to really hurt me? No. And the reason why is because it doesn't matter what it is, because I'm still risking the same. Does that make sense? Even though, let's say for instance, okay, I go here, I go to currency pair, Euro NZD. Where are you? Let's see here. So I go to Euro NZD, and let's say I'm gonna risk like 5% on this trade. So if I'm doing risking 5% on this trade with a $10,000 balance, my stop loss, and I want to do, I'm gonna do a 65%, I mean a 65 pip stop. I'm gonna click on calculate. Well, then I could do a 1 standard lot, 1.1 standard lot on this pair, okay? Because if it hits my 65 pip stop, I'm losing 5% on my account, which is 500, right? But what if my pip stop is only 35? If it's 35, then of course I can do a higher standard lot at 2.0, okay, at two standard lot, all right? But it really doesn't matter what the stop is. The important thing is your risk factor, because if your risk factor does not change, then all you're changing is your position size, okay? Because remember, the important thing is your first your first primary focus would be to minimize or reduce your risk, which means you have to pay attention to your risk. Your second step, the second priority, is to calculate your stop according to the 3-week average, according to your risk. And then your third priority, which is basically all you got to do is just place your lot size according to your risk there. Okay. And then pretty much that's it, you know. And then what you want to do is just, you know, have the discipline to follow through with your trade plan and don't deviate, okay? And I'll be honest and say that, you know, I'm not perfect. I'm still learning through these phases. And so every once in a while I do you know, I do struggle a little bit with discipline. You know, I see a good trade setup and I feel like, oh man, even though I'm risking just 5%, I can only do a 2 standard lot, but I really just want to do a 4 standard lot on this, you know? And so sometimes I do that, and I've learned the hard way. And you know, that's when you fall, and you have to take a little bit of a loss sometimes by doing that. And so, you know, I'm working myself through that, and I think that is the hardest part about trading. The technical analysis aspects of trading is easy. I mean, just looking through these charts and stuff, just marking up support resistance areas. You know, even if you just take trades off of these areas and only off of these areas, you can actually do quite well. And I do know some people that only trade off of these areas and these strong support resistance areas, and they do really well. But if you want to be a more active trader and you want to look at charts and stuff, then you have to pay attention to the money management part, and that'll really help you, so that you can keep your account longer and don't blow it. And as you grow your account, then you can just increase your lot size according to your account balance. Okay. So pretty much that's it, guys. I hope that you guys learned something that would be able to help you there. And I'll kind of open it up to some questions here. We finished up just about in 1 hour, so perfect timing. So we could spend a couple minutes to do questions if you guys want. So go ahead. Let's see. Yeah, I'll record this, Patrick. right, so you want to know where I draw the support and resistance lines. Okay, so again, okay, so let's just take this one. So support and resistance lines are, you just have to look for, first of all, you want to draw support and resistance lines on the day chart, okay, and also on the 4-hour chart. But really what you're looking for is you're just looking for areas where price has hit and it did not break through, okay? So for instance, let me just go right there and we'll take a look at that right there, see? So you notice that, I'm gonna see if I can blow this up a little bit bigger. You notice there's some areas right here that price has hit and it bounced back down, right? Okay. It went up here, it bounced down. It came up here, it bounced down. It broke through, and then it kind of broke through right here. It's like a fake out breakout, but it went back up. And it came back down here. It hit this area again. And then it bounced back up. It came down here. It almost hit this area, but this will still count. So this becomes kind of a support area, okay? So support, hitting support, going back up. Now, when it breaks through support, this support line now becomes resistance, okay? It breaks through. Now, as it comes back up, it hits its head on it. It comes back down. It comes back up, kind of close to it, goes back down, comes back up, it hits, it goes back down. It's now becoming resistance. And now, as you can see, it comes back up here, it hits, goes back down. It hits again, goes back down, okay? So you want to pay attention to these because these are good areas to place your trades. So, I mean, if it's going down here, you know that that's a good area and it hits, you want to do your sell right here, okay? What if price is right here right now, it's kind of hovering around, but what if it comes back up here again, right? If it comes back up here again, then you know that, okay, it's already hit all these times. It's a good chance that it'll bounce its head and give you a couple pips trading down, okay? So you kind of want to be aware of that. And of course, there's like these breakouts. Sometimes that happens, but more often than not, if you have a lot of areas where price has a hard time breaking through, then you have a higher chance of the trade going your way, doing a sell when it comes back up here. Okay, so same thing, with these areas down here. You just mark it up according to these areas where price is hitting. Okay, so that's how I do it. And so it's pretty simple. Just go through the charts and just have fun with it. All right. Let me see. Do I do trailing stops? I actually don't do trailing stops, Jimmy. I do everything manual. So if I'm up 20 pips, I'll move my stop to break even. So if it comes back down and hits my stop, well, at least I can still look for a re-entry, but I'm not losing anything in the market. Okay. So that's how I do it. Or if I'm up 40 pips, then I'll just kind of move my stop to 20 pip profit. Or depending on how the trade is, if it's some red news that's coming out after I'm up like 40, 50 pips, I might just close out the trade completely and just keep that. Patrick, the name of the app that I used is called, what is it now? It's called, it's FX, let me go back there. It's called FX FX calculator. Yeah, Tang. I'll put this. It's being recorded, and as a matter of fact, I don't have my site up, my Dare to Dream site up yet, but it's gonna be a membership site where all of you guys will be able to have access to, in which I'm putting all of my training materials and all of my webinars that I do in there. And as a matter of fact, I think I did some specific webinars specifically on just trend trades. I did one specifically on just divergence, one specifically on just trading off of support and resistance levels. And so there's a lot of content that I put out there online. I think it might even still on my YouTube channel, but I also have my own hosting service, so I'm probably gonna move it all to my own hosting service and then move it to the Dare to Dream team membership site once when that's up. Eduardo, I'm not sure what you mean by explain inverse divergence instead of divergence. Are you talking about hidden divergence? You're welcome, MK. Oh yeah, okay. So Eduardo, hidden divergence is it works, yeah, it works kind of weird. I don't I don't I don't trade it very often. Um but hidden divergence is kind of like it works kind of like opposite in a way, and I don't know if I'll be able to find an example for you. But Eh, instead of me trying to do that, the what you want to do is probably, I mean, you could just type it into YouTube. I'm sure that there's other people teaching about hidden divergence, um, so you can just do that. My training, the type of divergence that I trade is going to be a little bit different from what other people will teach you about divergence. Also, like for instance, USD JPY. So, for instance, this actually, okay, I have this up already. Um, for instance, for me, a good divergence has to have like this it has to have this huge histogram, and it has to go flatline with another hump. Okay, some people will consider um, something like let me see here. Doo-doo. Well, I can't really find a good example here to show you, but some people will consider things like this divergence, like it's got like already got another hump here and then a little bit of hump here and then this right here. Um, but it's not I don't like it too much when it's got like all this stuff in the middle. I like it when it's clean and it's just it comes down, there's a flat line with another little hump. Okay, that's like a clean divergence with a circle in the middle and there's like open space in the middle. Okay. Yes, Jimmy, I do some scalping. There's actually a trade that I'll be teaching you guys soon. It's called the 710 trade. Okay, and basically this is a very neat trade. Um, the guy that I learned this trade from, basically he did like a whole bunch of these, and he's won like 83% of the trades. And so let me kind of show you guys this real quick before we go. Um, so the stuff that I'm teaching you guys, I want you guys to know that it's already been tried and tested. Okay, there's um, these. Let me see here. I'm pulling up these stats here, and I'll show you. So these are the stats for the divergence trades, okay? And as you look at this, okay, and these aren't actually my trades. These are actually stats that I took from this guy when I learned divergence from him. And the reason why I learned divergence and I wanted to learn it was because of the high win rate that divergence has had. And so sure enough, you know, as I started using divergence, I'm up in the 80s, sometimes up in the high 80s in terms of win rate. And so this guy right here, he placed over 2,115 trades in a period of maybe 2 years or 3 years or something like that. And these are the stats. You see that? It's like for every one of these is like 86%, 85, 83, 89, 85, you know. So I'm not quite as good as him, you know, but at least I'm like, you know, hitting up in the 80s. And so, yeah, I mean, it's pretty incredible. So you really should learn this divergence trade because it's a very, very good trade to have as a trade strategy for yourself. Okay, and then there's this other 710 trade that I'll share with you guys later on another time. All right, guys. So I think we'll just go ahead and end it here. Again, I'll be putting all these videos inside of the Dare to Dream membership site. Once when the site is up, you know, these programmers are kind of slacking off on me, but you know, I'm getting on them, and hopefully we could get this thing going. Okay, but I appreciate you guys, and you know, I appreciate that you guys want to learn from me, and you guys are willing to sit through this 1 hour and 15-minute webinar. So yeah, take care and do good with your trading. Okay.